the People's Bank of China, will cut its reserve requirements, or the ratio of cash banks must hold, by 100 basis points, 1%, as the government looks to counter risks of a sharper slowdown in the world's second biggest economy. Let's talk more about that move with Miranda Carr, China macro strategist over at Haitong. She joins us now from London. Miranda, thank you so much. This was a big deal for one of the biggest central banks with big influence out there. Tell us what your thoughts are initially about why they did it. We kind of have an idea.
Well, the RR cut was widely expected to come in either January or Q1. A lot of it's offsetting some of the previous mid-term lending facilities and other sort of easing it's done over the past year. But the fact it's done a 1% across the board, and also it's done it this early, is an indication of the need to really boost the economy as we come into sort of pre-spring festival, particularly really tight liquidity. So this is sort of a more positive, it was expected, but it's a more positive move than we possibly thought.
Is this, Miranda, the first of possibly more steps to come from the People's Bank of China, given the outlook that we've seen from companies like Apple, also some of the PMI data that we've been seeing out of China?
Yeah, I mean, the interesting thing is, so it's, they cut the reserve requirement. They can do more reserve requirement ratios. They're still relatively high. They could go, they were 14.5. They could go below 10 quite easily. But where they face the pressure is on the interest rate, because that will affect the CNY US dollar and the capital outflows. So China will struggle to cut interest rates to boost the economy. So it's doing these reserve requirement ratios to boost more liquidity, give the banks more lending room. And basically that's going to be, we think, its key monetary policy tool for the first half at least.
Miranda, let's talk about the domestic policies outside of the central bank and monetary side of things. What exactly is the Chinese government looking to do? What can they do from, say, a fiscal standpoint or from just a government oversight standpoint to try to get things moving for this economy? Or is this just a situation where they're trying to engineer as much of a soft landing as they possibly can?
Well, the interesting thing is, so the key slowdown last year was not the trade war, despite the rhetoric, but actually the deleveraging, the domestic deleveraging. That sucked money out of the shadow banking sector, sucked it out of the consumer pockets as well, because they were borrowing through online financing and the shadow banking markets as well. So the fact that they've moved to a now monetary easing stance, basically, and loosening that, then you've got a key drag on the economy lifting as we come into 2019. And obviously this is going to try to offset the big drag, which is going to come in Q1 from the effect of the trade war, because suddenly you're going to see, having been the front end loaded coming into Q4 for the export growth, it's probably going to be really, really weak in Q1, possibly into Q2 as well, depending on negotiations. And that's reflected in all the big price falls you've seen in the domestic economy across the commodity sector and also sort of other areas.
Miranda, you opened the door for this one here because you talked about those trade talks. They are expected to kick off at a relatively high level with deputies on both sides coming together next week. What exactly do you think is going to happen out of this, and what could we expect to see from both sides with regard to progress on talks?
Well, the interesting thing is China's actually made some quite significant shifts. There's not been any big headlines on this, but a lot of the reforms, say opening up foreign investment, they did a big announcement on changing foreign investment on the 25th of December, when all the rest of the Western markets were obviously eating, celebrating. So there's been reform announcements to open up markets and give some more leeway to sort of the foreign, do more intellectual property. But whether that's going to be enough, I mean, I think the key issue is going to be when Liu He, who on the Chinese side meets with Leipziger, and that if the trade talks next week go well, and then they progress on to Leipziger and Liu He later in the month, then we could see a positive read across, because that's sort of top level agreement. But without that kind of, strength in the talks, then there's a risk that we could just end up with a truce that then goes on much further into 2019.